Welcome to ISE's FX Options Weekly Outlook, a weekly outlook on the US dollar versus the major currencies, hosted by Jason Ayres, a top industry instructor and founder of OptionSource.net. Learn to trade your views on the strength or weakness of the US dollar.
And welcome to the ISE FX Options Weekly Outlook for July 19th to the 26th. I'm your host, Jason Ayres, founder and president of OptionSource.net. We're going to start, as always, looking at our weekly chart on the US dollar index. This gives us a little bit of a perspective as to how the US dollar has been performing against a basket of currencies. We've suggested over the last couple of weeks that the US dollar index has been forming what appears to be a bear flag. However, it's definitely found some support at the 72 level here, which suggests that we may get a retracement up towards the top end of that range in towards the 74. If we don't hold, then we would likely see a retest of the 71. Our RSI seems to be sort of moving in a sideways direction, really not suggesting any momentum in either direction. However, our MACD seems to be leaning towards a continuation of a move to the upside. We're going to keep this in mind as we look at the currency pairs upcoming here. Okay, the first one we're going to look at here is the CDD, the US versus the Canadian dollar. Last week we suggested that we'd likely see some support in at the 100 level based on a measured move to the downside. We've since seen a little bit of a bounce off of that and a test of the 100.50 range. If this actually acts as a resistance level, the most logical move would be a push down towards that 98.5, which represents a low identified back in mid-June. This also represents an extended move of that retracement. That retracement also is about a 38% retracement from a Fibonacci perspective. If we look at our MACD, you can see that we still are trending towards the downside, and this also suggests that what we're witnessing right now is just a simple retracement. Our RSI also seems to be flattening out a little bit, not really showing any momentum to the upside. So very critical how we see this play off the 100.50 level here at this point. If we do break above the 100.5, then the most logical target to the upside would be to see this pair value traded at around the 102 level. The YUK, the US versus the Japanese yen, well, we did see a completed measured move to the downside here, which found us find some support at the 104.5. So a huge move last week with a push up towards the 107.5. We're not quite there yet, but there's a high probability that that is where we would likely see some resistance take place. If we look at our MACD seems to be turning up a little bit, suggesting that there is definitely some momentum to the upside. Our RSI has actually popped above that 50% level, also confirming some momentum to the upside as well. If we see a break above this 107.5 focal area, then our next logical target would be 108.5. Our EUI, our US versus the Euro, well, we suggested that we'd likely see a continuation to the downside last week where we were looking for support at the 62.5. Well, that did indeed take place, and we saw a bounce up into the 63.25 focal area there. You can see that we're definitely meeting with some resistance there, and we would likely see a retest of that 62.5. Now, keep in mind that that's a very critical area with respect to the pair value here, simply because it represents an all-time high on the euro or an all-time low on the euro versus the US dollar. If we manage to find some strength and we push above that 63.25 level there, our next logical target is 64. If we look at our MACD is starting to cross up a little bit. Our RSI has also been trending to the upside. However, we haven't quite made that commitment above that 50% level to suggest any sort of a continuation. So we really want to see how things play out over this week with respect to a potential trade entry. Break above 63.25 is suggesting a retest of the 64. However, a consolidation there and a little bit of a pull off is going to see us most likely retest 62.5. Our BPX, our US dollar versus the Great British Pound, also completed a measured move down in towards that 49.5 focal area. We're now actually retesting a resistance here, or a previous support up in the 50 level there, which also represents about a 38% retracement from a Fibonacci standpoint. If we actually consolidate here and we can't push above that 50%, a bounce off of that and a move towards a downside is likely going to find a support, which is not illustrated here on the chart, but is identified at the 49 level. Okay, a break above that would suggest a continuation in towards the 50.5 level with respect to a measured move or a retracement to the upside. However, looking at our MACD still suggests that we're trending towards the downside, so be cautious of any moves to the upside. Our RSI is starting to turn around. However, we want to see some confirmation here, so be very cautious with respect to your entries. Watch how it plays off of this 50, how the pair value plays off of this 50 focal point here, and take your positions based on your consolidated break above or below that particular range.
Thank you for participating in this week's session. Please join us again next week. For more information about Jason Ayres and to sign up for free FX options trade alerts, just visit www.optionsource.net. To learn more about ISE FX options, including our weekly webinar series, visit us at www.ise.com/fx. ISE FX options can easily be traded through all options-enabled brokerage accounts. These exchange-listed securities are cash-settled in US dollars and have a European-style exercise.